What's going on, YouTube? So this video, we got no fancy editing, we got no funny memes. Dave's not even going to make an appearance, but I just want to publish something really quick just because last week my wife and I were on vacation, enjoying our time in Mexico, getting some sun. And then while I was gone, we got the coronavirus going on. We've got the Dow, the stock market going crazy. And here it is Monday, and I'm looking at the headlines, which you can read right along with me. Dow falls more than 7% or stocks fall more than 7% in the Dow's worst day since 2008. And at the time of this recording, so the market's already closed for the day, and we are down 7.79%, over 2,000 points, which, all things considering, you know, when the Dow, we started off at 29,000 as opposed to back in 2008 when it was, 8, 9, 10,000. Dropping 2,000 points, like that's sounds like a lot, which it is. I don't want to discount that, but nonetheless, like, you know, we are talking about a much bigger number, almost 3 times what it was the bottom back then. But the reason I want to do this video is, for one, I'm getting questions from YouTube commenters. I'm getting questions from family members, Facebook friends, social media on what they need to do. And one thing and so that was one of the reasons. The other reason is, you know, I started this investing challenge where I've got accounts with M1 Finance and also Robinhood. And you talk about bad timing, depends how you want to look at it, maybe perfect timing as far as getting money in the market. So I've got people asking me, like, you know, what do I need to do? Do I need to stay the course? Do I need to hold off? Did a recent Roth IRA video, and people were wondering, should I wait? You know, should I do the Roth IRA now? And so that was really just kind of the premise behind this video. But to answer the question, you know, what do you need to do right now? And I just wrote an article for Business Insider. And one of the first things I said in that article, which I'll say right now, is the first thing that you need to do is stop and take a deep breath. And after you do that, take another deep breath, because the one thing that I have seen in my experience with investing is that you're going to go through these. And I am amazed that it's taken this long to have, I don't even know how this is going to play out. You know, we could make everything back, you know, in the next day or two, or it can continue to plummet. I will tell you this, is that having gone through 2 bear markets, going back to 2001, 2002, after the whole 9/11, and then we have the 2008, is that what you're experiencing now, all of the doom and gloom, like, that's always going to exist. I think it's even worse nowadays just because you've got social media, you've got Twitter, you've got Facebook, you got everybody announcing this, or openly voicing their concerns, their thoughts, their opinions on what's going to happen. And that is just, I mean, that's worse than the coronavirus. I mean, that just can infect your thinking and your frame of mind, and also just your long-term aspect. So as far as, you know, what you need to do, if you haven't started investing, does that mean that you need to wait? I would argue no, you don't need to wait. Like, start investing now. And people hear that and they immediately assume, like, oh, you're crazy. Like, why would I start investing right now? And I'm not saying, like, take all of your money that you have, all your savings, and put that into the market, put that into a stock. What I'm saying is, if you haven't opened up a Roth IRA yet, go ahead and open the Roth IRA. I don't know if I'm going to pick Robinhood right now because of all the issues they're having, which, you know, that's for a whole other video. But at least get the account open so that you can start investing, and start investing $50, $100. I mean, this actually might be one of the best times to invest. So if you haven't started investing, yes, please start. For those that are, and actually just thinking of a family member that had messaged me asking this, you know, like, what do I need to do? And I don't know their entire situation, so I'll answer them the way I would answer you. And, like, it's not an easy answer, and the reason is because, like, I don't know what you have. I don't know what you're trying to achieve. I don't know what your financial goals are. I don't really know how comfortable you are or aren't, you know, in your investments. I don't know how much you trust the investment strategy that you have. Is it something that you did on your own, or did somebody pick it for you? So basically it's just to you out there that is wondering, man, what do I need to do? It's time, after you take a deep breath and you take another deep breath, it's remembering why you started. Why did you start investing? Why do you have investments? Or if most of my subscribers on this channel are younger, 25, 35, in that case, you're not retiring anytime soon. It's not like, unless this is saving up for a down payment on a home, then you shouldn't really been in the market to begin with. That being said, why did you start? What are your goals? What are you trying to accomplish? And if we're talking about retirement, we're talking about long-term money, don't worry about it. Because maybe if it continues to go down and you got out now, that's great. Like maybe you save a little bit more if more on the sell-off. But the reality is that, when are you going to get back in? When is the time going to feel right to get back in? Because I promise you, going back to 2008 and every other bear market, the market didn't start coming around and then all of a sudden the headline said, all right, time to buy, time to get back in. Like, even as the market started to come back, going back to 2009, it still never felt safe. I mean, many investors didn't get back in till 2010, 11, 12. I mean, they waited and waited and waited before they felt comfortable to get their money in. And that's when it comes to investing, it never feels like the right time. I mean, it never feels like the right time. Maybe when the Dow was at 29,000, it felt like the right time. But as you can see now, that wasn't the right time. So you're never going to get a memo. You're never going to get an email. You're never going to get a direct message to whatever social media account that you're on that says, hey, the market just hit a bottom. It's time to buy right now. That's not going to happen. So if you get out, that's great. You can sell, get out of the market. But then the question is, when are you going to get back in? What's going to be that indicator? And most people don't know what that is. So to that, I say, if this is for retirement, man, we just sit tight. And if you have more cash that you want to start investing, I would strongly consider start moving some of that back in. And that's kind of what I'm doing. I haven't had a chance to update on the investing challenge that I did, but my biggest account, which is Robinhood, in that I actually have $200,000. I don't think I've actually shared that yet. I said I was going to do 100, so I'm doing 200 in Robinhood, 100 in M1 Finance. But in M1 Finance, so Robinhood, actually, let's start with Robinhood. Robinhood, I think I'm down. Let me actually check, see what it says. I think $7,000 out of 200. And the reason is because I haven't invested all the money yet. And so here, I'll show you. You can see that. Nice little glare going on. It might be hard to read, but 193. Got my light in the background, give you a nice little reflection. So 193,000, there we go. So that's my Robinhood account. So we're talking $200,000, and I've only lost $7,000 after the market has done what it's done. And the reason being is because I still have $157,000 in cash that I haven't invested yet. So that's working out pretty well, all things considering. Now that is my dividend portfolio, so much more dividend paying stocks in that one. Compare that to my M1 Finance account, and this one, come on baby, zoom in for me. I don't know if you can see. I'm using my different camera. It's 96,000. I'll read it for you. 96,587 is that account. That one we're down 3.4%. With that one, I've invested in some growth stocks. Have not released those yet, but I still have $50,000 spread out amongst a Vanguard intermediate short-term bond fund and a ultra short bond, not bond fund, I'm sorry, a ETF. So 2 ETFs that are primarily in short-term bonds and the rest are in stocks. So I'm down, the market's down 7.79% today, and overall I'm down 3.41%. And this all started, I think, about like a week or two ago, I believe, or at least when I finally placed all the trades. So I still have some sitting cash there for the most part, with the ETFs. So we're talking about one take Monday. My video limit just reached at max at 10 minutes, so that's what happened there. But so anyway, M1 Finance, I'm down 3.41%. You know, we'll be investing more here soon. When exactly? I don't know yet. I've got other stuff going on, like with my kids being home today because the school was shut down because of coronavirus. That's a whole other story. But you know, right now I'm just kind of sitting tight. And I'm not going to sit too long because I know I sat way too long during the bull market that we experienced going up until a recent day. But I definitely see this as a buying opportunity, and maybe not like I'm going to dive all in opportunity, but I'm definitely going to take advantage of some of the decreases I've seen in some of the stocks that I've been following that I just think are good purchases. And if I thought they were a good buy, you know, last week, then I mean, they're obviously a much better buy right now. Sorry, I'm just trying to get myself in focus. There we go. All right, but that's what's kind of going on. And I just want to remind you all, for those that are freaking out, I mean, I'm assuming that many of my subscribers have not gone through this. And I remember with 2008, I mean, it felt different for a lot of reasons. You know, going back to the 2002 crash, that one, with 9/11, all that going on, like it felt like there was, I guess, kind of like just a reason for it. 2008, you know, it was the home, the mortgage, all that stuff, but still, like it just felt different. And every bear market feels different. And what we're dealing with here with the coronavirus, oil, Trump, all the good stuff going on, you know, everything's going to feel different. But the market is resilient. You know, you have to remember that what is driving the market are companies, corporations that are producing products, services that you buy, sell, that you use on a regular basis. And, you know, I use Amazon. Amazon ain't going away. I use Google. I use Facebook. Got electricity in my house, internet, cell phone bill, food, all this good stuff. And that's all. Yeah, markets may continue to drop, company prices may continue to drop, but doesn't mean that it's going away. Doesn't mean I'm selling everything and buying gold or Bitcoin or anything else. So anyway, just want to give you some encouragement and just to remember that it is a long-term play. You know, it's a long-term play. You know, you're going to see some minuses. You're going to see some more nasty headlines. You're going to see a lot more people freaking out and want to jump off a cliff because the market continues to drop. But this is not the first bear market that's ever existed. There have been market sell-offs in the past. Sure, this might be the largest, not so much percentage-wise, but like point-wise. But then once again, the Dow had never hit 29,000. You know, we were at 14,000 whatever back in 2008, and we were almost double that before the recent drop. So just keep that perspective in mind, and keep that perspective in mind when you see the headlines of what they're saying and what they're sharing, and just also have to remember that all these, including YouTubers, all these headlines are meant to get you to click and to open that URL, open that article, so that they can get the impressions, so they can get the views, and they can sell more advertising. So just keep all that in mind. And if you got any more questions, hit me up here on the channel. Hit me up on Twitter at JJeffRose. I'm happy to answer any questions you may have. All right, y'all. Hope you enjoyed this impromptu, no editing, hopefully mostly in focus video, reminding you it's your money, it's your life, and only you can make it awesome. Peace.